So this video are for those traders that don't look at the higher time frame before they take their trades. Don't get me wrong, I'm not saying scalp traders are wrong for what they are doing. They're not wrong, but it's much more advisable to check the higher time frame before you take your entries. Alright, so this is Eurocard on a 30 minutes time frame, and whatever I discuss here, this is a disclaimer now. It's not to the insult of scalp traders or whatsoever. Alright, so this is 30 minutes time frame, and obviously from 30 minutes time frame you can see there has been sales and sales and sales and sales. And to be honest, I've looked at the trend, and to be honest, it's quite good. Okay, it's quite good, but then let us just walk through it. All right, so we have so and so and so and so and so that happened here. Okay, we have break of structure from here, then mitigation. Let me mark them out. We have a break, and then we have a mitigation. That is, I would say, from the first leg, and we have a void, a liquidity void. I think I have discussed liquidity void before, but just to recap, liquidity void are spaces left on the chart. Okay, basically occurs at the start of a new week, because on the weekend there is inactivity on the chart, and then when the market starts on Monday, there is not enough traders or a lot of traders in the market at that particular time, maybe 11 p.m. on a Sunday down to 12 a.m. on a Monday. Alright, so at that point, liquidity void is formed. It basically shows an inactivity of traders. So whenever it gets filled, it could be taken as an entry, because a liquidity void is kind of like a fair value gap. Okay, you could take it as an entry, yes, it happens. But then when it's formed here, I don't think there is anything you could do. I have forgotten the pair that I saw a reference on that liquidity void. I could have gone to show us how to be taken as an entry, but that's by the way. So let's continue our joyride to the downside, blah 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 blah, and whatever that happened here. The entry was taken from this zone. I think this PR is too much, but you get the gist. So up until here, they took the last entry. That is the current one. And probably whomever that is going to take this trade will think, okay, I'm just going to sell, and just going to sell from here, set my stop loss slightly above this high just to be protected, slightly above this high, which is a protected level by the way. I think we discussed protected level, and then I take profits down here. You might not be wrong. This is a 7-hour trade. You might not be wrong. You might be very correct, and the market might do exactly what you're reacting to. But then that is the importance of going to the 4-hour time frame, or not, maybe not 4 hours, but a higher time frame. So on a higher time frame, what am I saying? I am saying that the market might not actually do what you're trying to ask of it. Saying that this is an entry, and the market has mitigated it. It hasn't swept the kind entry, but then this is an entry, and the market has mitigated it. I'm also taking out liquidity. They take out liquidity here. Okay, no, it didn't get to the point. It didn't get to the liquid point. But then the main thing is the market has gone down, and it's probably going to sweep you. Why is it going to sweep you? To create a break of structure, and then might now come down. That is when it might now come down, after it has taken every other liquidity here. Might now come down to this area, okay, and then mitigate again, and then continue with its buy. Okay, now that is the importance of checking the higher time frame. Checking the higher time frame key level is just to be on the safe side. Just to be on the safe side. Now I don't know about whomever to be an entry here. Basically, I'm not taking entry on this trade. I'm waiting for a break and then a continuation. But when I take the entry here, I think they are a little within lock. So because if you kept your stop loss slightly below here, then you take profits whatsoever wherever you want to take it, or wherever you want to keep it. That's your preference. So if they actually took their entry here, in their stop loss here, they are slightly below lock because the market did not sweep them out. So yes, they might still be in profit and still be in the trade. But then for this lower time frame trader, I don't know what you're doing, but I hope the market doesn't sweep you out. Alright, so let me now share with you what happened here. That is, I've discussed with our lower time frame traders. Now, my fellow day traders and swing traders, this is my entry, this is my bias, this is my setup. So I have firstly the break of structure from this zone. I didn't introduce the pair. This is Euro card and it's on a 4-hour time frame and the structure is so sweet. So this is the first break of structure and this is the fair value gap left here which has been mitigated, and this is a move. This is the second break of structure which is giving me a confirmation that the market will continue on a downtrend, sorry, on an uptrend, forgive me. And then this is my inducement. Now there is initial liquidity and there is inducement on this particular chart, okay, which makes it an A plus setup for me, okay, which makes it an A plus setup for me. Now I have my inducement, I have my other block, fair value gaps, continuation to the upside. Then right here I have my engineered liquidity. At this point, where is my pen tool? I'm looking for that thing. I have my engineered liquidity at this point, okay, and it was swept very much well, then left a sell rejection candle, which obviously is showing us confirmation to the buy side. Now I'm going to be very attentive on this particular trade because I want to capitalize on this move. I want to capitalize on this move because it's an A plus setup and I wouldn't want to miss out. Alright, so then the other block was filled. Liquidity has not been taken out from here, but every other thing has been taken. But it is a very good setup. So I'm looking for buys at this point, and then I am going to capitalize on every other what's the name swing or every other downtrend or whatsoever it is that happens within this full leg. All right, I think this is going to be a very good entry. Now let me just show us a couple of things below here, then we could proceed. Now what am I actually showing at this particular point? I want to be showing us the BMS. Is it BMS now? Shift in market structure, sorry, SMS. BMS is breaking market structure, then shift in market structure, or you could call it change of character, which is CHOCH. You could call it change of character, but I think I would want to use SMS at this particular point. Alright, so shift in market structure is basically a concept or a point when the market changes from downtrend to an uptrend as it is here, or an uptrend to downtrend as it is here. Alright, so uptrend to downtrend and then downtrend to uptrend. So let me get my chart back to normal. Alright, so what happened here? There is a downtrend, there is moves to the downside. There are moves to the downside, and at this point we had a failure swing. Now, what is a failure swing? A failure swing is when the market is unable to continue a break of structure at any given point. Okay, when it's unable to continue a break of structure, when it stops within that particular leg, within that particular range of motion. Okay, so the market gave a failure swing here, which stopped within this particular range of motion, and then there is a reversal. Okay, there is a reversal to the upside, and just to be sure, if you're not sure of the particular, if you're not sure that the market has reversed, you could see the first shift in market structure. And when does the shift in market structure occur? It occurs when market takes out the previous high that formed the break of structure. Okay, maybe it did not form a break of structure, maybe it formed the shift in market a failure swing. Then you target that particular high or that particular low. And then once the market breaks above it, then you are in the clear of a shift in market structure. So yes, this is a break of structure of this previous high, and yeah, I'm now in a very good zone to probably I might wait for confirmation to be sure that the market has shifted, then I can continue whatever it is I am analyzing. So yeah, this is the first shift, and then this is the second shift in market structure. This is the second break of structure, or break in market structure, which basically tells us, okay, yeah, super, we are now in this move, we are now in the buying move. All right, so this is exactly what happened here, and this is what shift in market structure basically means. You can get a pen and a paper and then note down the definitions and also draw out the diagram so that you can use it as a reference whenever you're looking into any chart. Okay, so let's use here also as a case study for a shift. Okay, it's just a shift because it's a counter trend and it's going to sell into our point of interest. So I'm not really taking it as something very much um big to this trade or influential to this trade. All right, so this is the last break of structure to the upside, and then this is the low that formed the last break of structure to the upside, and you could see how impulsively the market came back down and took out that low. Okay, you could see here, and on the lower time frame, 30 minutes, you saw when I showed you the entry at this point. Maybe I should show you again. Okay, just to recap on it. So you could see that this is the low because the look at structure, and look at this, liquidity void, liquidity void. So you could see that this low is the one across this last bit of structure to the upside, and you could see how the market took it out, and you could see that before it took it out, it created kind of like an accumulation at this zone, which basically gives us the other block. And then because this is type 2 efficient price action, EPA type 2 EPA, you can search on the channel EP and IPA, that's efficient and inefficient price action, and you would learn it. Alright, so this is the other block here that was swept, and then there was a continuation. Then there was a continuation of this particular trend to the downside. You could basically see the continuation of the break of structure, also a break of structure, then another one, and so on and so forth. Whatever that happened here, I think you've had the full idea of whatsoever that happened right from this zone to this particular zone. Now there is also a high chances, lest I forget, there is also a high chances that just like the previous pair that dealt with me, that it could break below, that's into this zone, because it's a higher time frame entry that has not been mitigated. So there is a high chance, nobody knows yet, but then let's see what the market will do. All right, so this is going to be the end of this video, and let me believe you've learned everything that is necessary for this particular video. Now there is going to be a part 2, that is if the market plays out very well as what I expect, and probably a part 3 if it gets down to this center range POI. Thank you for watching. Do well to like, subscribe, and leave a comment. Thank you.